All right. Good morning. Good morning, everybody. I'm just starting a minute or two early. You know, We've been doing a lot of work on the website, the Next Level Library, and the courses material, including now when you're going through the courses, it keeps track of where you're at, so that as you progress, it's monitoring your progress and, kind of telling you what's up next, how many more courses you have until you're done with that section. It's pretty cool. Um, to be able to even manage the material that I developed for the Next Level Library, to be able to understand this material, you'd have to go through courses. Um, that's been one of the biggest complaints, is that the Next Level Library is too advanced and people don't understand the material. But you know, you got to get there by working through the courses so that you understand the stuff that's in the next level. It makes sense. When you go to college, you don't start with the fourth year material. You start with the first year material and you work your way through. Go ahead and get the Zoom started. All right. Good morning. Good morning, everybody. Hopefully, the holidays went well. One more week of this lack of liquidity, lack of participation. We're getting a little bit of a movement this morning. Things are starting to shake loose as more and more people wake up. But it was a very muted overnight hours. One thing of note is the size of the expected move. So on the ES, last week's expected move was about that big. This week's expected move is that big. Last week, this week. So you can see the volatility has dropped off a lot. And it's not because of the 4-day week, right? Last week was a 4-day week. It was a very big week when it comes to the expected move, and we got all of it, right? We went from the lowest part of the expected move all the way up to the highest part of the expected move last week, and almost closed on the line, which, believe it or not, happens way more than we would care to admit. That happened last week too, where we closed on the line. It's worth learning how to use that thing. It's a very powerful tool. But we have a very muted week, a low volume, low volatility, low expectations. If you want a more current expected move, you could come in and look at uh, the options chain. Even if you're not trading options, it's an expected move, right? It gives you an indication of expected movement. Remember, it's a plus or minus. So from where we open Monday morning, the SPX will have a plus or minus $64. And it's supposed to be said like and or, right? Because it can do both. It can go up and then it can go down, or down and then up the entire 64 in both directions. Calendar of events today. 10:30, 11:30, 1 o'clock. Those are the ones that are going to be most impactful to us. The unemployment and industrial production is not for us. So that's for another nation. So the ones today is just 10:30, 11:30, and 1. It is important to recognize that those additional auctions, the ones at 11:30 and 1 o'clock today, those can take a range bound market and galvanize us into an amazing day. or it can take an amazing day and shut it down and have us sitting sideways for the rest of the day. So be mindful that lunch today, which normally runs from around 11 o'clock to around noon, may get cut short as we come into the 11:30 time frame, right? Typically, if we see a rally starting during lunch, we would not have much trust or faith in that rally. But if it kicks off right at 11:30, it's connected to these auctions, to these additional auctions, right? Because there's auctions every day. And there goes the market moving to the upside. It liked something out there. That NASDAQ woke up while I'm streaming this. Looks like the ES is following Russell, Dow. See everything kind of just getting a little bit of a booster shot. Giddy up and go. VIX pushing to Friday's low. Got the dollar fading back down inside of its own range, and the bonds trying to get a little bit of a push, but it's still sitting inside of that Globex range. We'll come back to those though. All right, so as much as last week had a lack of participation, it certainly didn't have a lack of movement. You can see through the last 4 days how we've gone from 4,500 to 4,700. It's a 200-point move, right? Just a constant, consistent, persistent direction to the upside. And it has been, relatively controlled, right? It's nothing extreme that would cause us concern or warnings. When we have a market making moves, we always want to be able to answer that question: how far away from the 10 period daily moving average are we? Because if we stretch too far beyond the 10 period daily moving average, it's very likely going to be a range bound day and or a down day to get caught back up with that 10 period moving average. We're only 1.5% above the 10 on the daily, so that's not too bad. You know, if we look for reversals, it's usually above a 2 where we start to see that decline, or at least a 1.5, 1.7. So we're not there yet, right? Kind of take it out to the higher time frame. All we're doing here is asking how far away from the 10 are we? And you can see every market has its reversal point, a place where it says we've gone too far and we need to pause. We've gone too far too fast and we need to pause. We're not there yet. Generally speaking, there was some period of time where we were reversing around 1.5, but for the rest of the year, we were reversing closer to a 1.5 or even a 1.75 and a 2.0%, right? 2% away from the 10. If we flip that into weeks, we're only 2% above the weekly 10. This one is just a little bit more of a concern, but not much, right? So right now we're down here. Turnarounds have been starting at around 3 and 4. So the ES has not moved too far, too fast yet. It's really a nice way to quantify that. While we're out there, we are getting into the nosebleed section. When we look at a market that's at all-time highs, change the language a little bit and say it differently. It kind of puts some perspective on things. If you are trading a market sitting at its all-time highs, you are paying more for that market than has ever been paid for in the history of that market, ever. something to think about, right? When you put it in that context, you're spending more for it than has ever been spent in the history of that market. Make you feel good? And buy more of that. I'm not implying that it's a bad thing to do, by the way. Just, you know, put it into a little bit of context. So we do have some reversal zones over our head. We are in the liquidity right now. This is where we would expect to see first touch rejections, uh, fades back, struggles to make it through this liquidity. We can even, put into a perspective of time and volume, right? And from our current location, of course, it's very shallow right through here because the only liquidity that was there was from right here. So there's not a lot of resistance from, previous price action over our head, just individual pivots. A little bit of liquidity from anybody who perhaps, tried to go long from here. I always hate that analogy. Who would hold through all of that and then run it all the way back up from there just to close as soon as we got there, right? I mean, but that's what they say. So that's what we will mention. Trapped traders, suckers that bought it right at the very, very top and held all the way through all of this and are waiting now to get out without getting hurt. I'm sure that, somebody did it, but a lot of people, unlikely. Although this area of liquidity would make more sense, that there are trapped traders here, fools that went long right at the highest high point and are now looking for opportunities to get back out of it. But we're crossing through their zone when the market is technically still closed. Of course, there's trading in here. It's the futures. The futures are open all night long. But generally speaking, we're still in a closed market. So as the market, gets into pre-market and into RTH, if we still have liquidity at that zone, should be able to recognize it in the tape. So we got a critical pivot at 47.43. We have a cog line at 47.11. Some volume support at 47.20. So you can see here, this is time by price, 47.20. And here is volume by price. I believe we still have an ADR of around one something. Let's see, 1.7. So we still have 1.4% move to the upside that we could make today. Although it's worth noting, we've already done 12 hours of the day. So if we were going to make another 1.4%, this thing needs to get off the bench and get into the game, right? It needs to hustle. We would see that in finance, technology, probably some energy. It wouldn't be just, sneaky. It wouldn't be subtle. It would be very in your face. You would see it in the sectors, the AD, tick, trend, market breadth, everything. So if we're going to make that average today, then we're going to really see the market start to light up across the board. And right now, we don't really have that. Should the market start to flip over and we get a move to the downside, we will resolve the Globex low and then Friday's or Thursday's Globex high. I really don't see that it's going to get worse than that, but if it should, then it would be Thursday's Globex low. And that would give us our downside projections. So we got our upside projections and downside projections. As a pivot point trader, I do a lot of study and a lot of work on pivot points, and the market moves from pivot to pivot 90% of the time. The only time that the market is not moving towards a new pivot is when we're moving into all-time highs. We're basically there. So when we get into the intraday, we're going to want to be using the intraday Fibonacci as I've been teaching it, right? It's that 5-minute setup with the fib. It's just a very specific, nuanced way of doing it on a 5-minute, nice and easy. That way people can get familiar with using fib. Once you get good at doing that, you can basically use it however you want. For the NASDAQ, same thing. We're expecting, that it could move 2.2% today, and it's only up 0.5%, so plenty of room to run. But if it's going to make that move, it really needs to start doing it. 12 hours are already up. We're done with a good chunk of the day already. So from here, we would want to see this thing lit up like a Christmas tree. Tech and energy, maybe some consumer discretionary. You really see a push, right? Now, the NASDAQ 100 does not have financials in it, but a lot of financials now are fintech, right? They're finance technology. So we're going to be looking for any kind of resistance out here on the higher time frame. Bring up your major moving averages. A 510 is great for momentum. A 2050 is good for health and trend. So, a 5, 10, 20, 50 should give you a clear picture of the health and strength of the market, the direction of trend, and then how much momentum is in that trend. With Thinkorswim's daily indicators, just type in the word daily at these SMAs, daily SMA, you can plot that moving average on the intraday time frame so that you can see it. That way you can ask the question, are we about to hit something? And if we are, what is it? What are we going to hit? Because when the market does hit its daily moving averages, it very often responds to that. So you can see we're well above the 510. And above the 2050. As much as all the bobbing heads on TV want to scare you with all the different things that you should be cautious of, and of course we should be cautious, the market continues to make these advances from these lows right back up to these highs. And of course, when we get into these highs, we do need to be cautious of a reversal. There's a lot of resistance over our head, but there is nothing in here saying we're going down, right? We want to trade what we have, not what we think. Should the market turn bearish and we flip back over to the other direction, we will look to resolve the Globex low, then Thursday's Globex high, and Thursday's Globex low, which also happens to be Wednesday's highest point, institutional pivots. So that gives us our upside targets and our downside targets in the NASDAQ. With this move that we're seeing here in the indexes while I'm streaming, we're seeing it reflected in the VIX, which is nice. We're seeing an exaggerated move in the dollar, opposite of the VIX, which is good. It's showing us that this move in the dollar is not connected to a global risk situation. And we're seeing a little bit of a bump in the bonds, but not enough for me to believe that the bonds is the catalyst for this, especially since that move in the bonds seems to be moving to the upside, even at a bit of a grind. So we have stocks and bonds both moving up. I know this is where we say it's not supposed to do that. A couple of really good red to green names this morning. It's not the only thing out there worth trading by any means, but it is very simple and easy, even for new traders, to be able to identify a trade opportunity. Netflix, for an example, was a red to green. Well, it's a red now, right? We're looking for a red to green. So red market rejected off of the 20 on Wednesday or on Thursday. You want to watch this in the pre-market for a rally up at least as high as Thursday's open. Opening above that would be even better. That way we can use yesterday's open as our support line. And then the target would be somewhere around 630. I know if you're thinking, damn, that's a long ways. I don't think we can go that far. If we open there, then we're looking at a 2% move from the open. But if you measure from where we closed, then you're looking at a 2.5% move. And neither one of those are a 4% move, and that's what we would look for on a red to green, right? A 4% move. So it can do it. It can easily do it, right? Its average daily range is 2.8%, and neither one of those measurements exceeded 2.8%. So if we get a red to green this morning in Netflix, the target will be 630. I'm going to be buying those 630 calls, right? I'm not going to be buying the 620s or the 625s. I'm going to take it out a little ways and use those cheaper options. And I get it, right? When we say cheaper and they're still $650, they're not so cheap, right? But I can get two of these for the one of these at the money. So yeah, I would rather have more than one so I can fade the play. I don't want to go out to the 650s or something like that. Dollar wise, it's there, right? If you buy that 650 and we make a $5 move, you could unload it for 283. You bought it for 20, we'll just say 200, and you sold it for 280. You made $80 in a $5 move. $80 in a $5 move. That's not what I'm looking for, right? You get those 630s for $615 and we make a $5 move, then you're looking to, unload it at 785. You're looking at around $150 profit. I know it's not as good as what you could get at the money, but if I have two of those, then I'm looking at $300 profit in a $5 move. And we're looking for at least a $15 move, right? 3 strikes. Now, one of the things about being a day trader is recognizing your strike width. This is a $5 wide strike width product. The way options Greeks are applied is when we change strike prices. So if you're trading something that has 50-cent wide strikes and we move through 5 strikes, then you gamma load, apply, gamma load, apply, gamma load, apply 5 times. And that's where the value of those options just explode. And you see those 1000% profit trades. Strike price shift changing and application of the Greeks. You take something like this, it would make a $15 move. We'd only change 3 strike prices. So first one loads the gamma, second one applies the gamma and loads again, and then the third one applies the gamma. Gamma loads. It would make for a really decent profit, but if we were to trade something that wasn't $5 wide and we had a really good move through 5 strikes instead of 3, we'd see a better outcome. So Netflix is one of those. Walgreens is another one. I'm in an iron condor on this, so I really want to see it rejected and fall back down. But on the other hand, we did have a beautiful red day on Thursday. This is the red to green that I really like. Closed in the lower portion of that red day, and it wasn't a very big day, right? When we look at the size of Thursday compared to the size of the previous 20 days, it's a very narrow day. If we are to rally up in the pre-market at least as high as yesterday's open, that would be a good start. Completely outside of yesterday's range would be even better. And the target for this, of course, would be right around that 51.5, close to 52, right? We got an ADR of 2.5%. Even just rallying up from the low of where we closed to the high of yesterday would not even be a 1% move. Getting us our 2.5% would put us right around 51.75, which would get us through this liquidity pool back here, right? That zone of danger. So, aiming for the 52 strikes, as long as they're not the bag holders, come out here and look. You don't want to get caught with the junk, right? And these all look good. No issues there. 52 strike isn't bad. 52.5. Yes, I mean, that's not bad. If you want to get really frisky, come into the front series. Now we're starting to find some of those bag holders. If you're trading on the December 31s, I would not go lower than the 52.5s if you're looking for some out of the money stuff. And that's because you're going to get into these bag holders down here, this junk. These are just people hoping for a prayer. And Pfizer was another one. Red to green. If we make that bounce off of the 10 and were to rally in the pre-market above 60, that would be just about the best setup that we could see on this thing. Definitely want to see it open at least as high as yesterday's open, because that's our support level at that point. Got a lot of concern around 61, maybe 61 and a quarter. You could target those 62 calls in this because we've got an ADR of 4%. 4%. So a 4% move would put us right at the top of the range. And if we were targeting the 62s, then we're looking at a 5.7, right? But go from the open, right? There's your 4% move, 62s. Red to green setup. So the big deal in overnight hours was tech and retail in the Asian markets. Beautiful price action yesterday. Nice boom in Europe. There was, they were holding some pressers talking about that Johnson is not expected to introduce any limitations in England, so no lockdown on the deck. Goldman and JP Morgan both came out with statements about the new year. Goldman is talking about liftoff, and they're not saying anything we hadn't already heard. Liftoff in March and 3 hikes planned in 2022. And then for JP Morgan, they're all talking about concentration right now, which I talked about it last week, performance chasing. Looking at things that are up year to date at least as good as SPY, right? Because if you're in something and it can't even beat the benchmark, why not just get rid of it and trade the benchmark? The way JP Morgan looks at it is that this is not a risk off indicator that we're seeing all this concentration. It's not the idea that people are piling into those out of fear. It's more of an abundance of caution, and that they have a lot of cash. So they're actually using this concentration as a precursor or a bias to an upside move, right? And what they're basically saying here is we're at the top of the range, and a lot of people are sitting in cash ready to go, loaded up and ready to go. Earnings so far have been able to dominate through COVID, right? Places have proven time and time again that they can continue to make money even in the supply chain issues, even with lockdowns, even with the lack of staff, hiring situations. They're still making money hand over fist. And as long as companies can continue to do that, putting out record earnings, we're going to continue to go up. So JP Morgan didn't say we're going to break out of that box, but they said they're bullish. And we're looking at the S&P So if you're bullish and you're looking at the S&P and we're sitting at the top of the box, what else are you saying? That we're going to break out of the top of the box. But they didn't say that, right? Can see the sectors this morning. Everything's looking really good. Emerging markets are flat, which really isn't too big of a surprise, right? It's the end of the year. A lot of trading institutions around the world just aren't stepping up. So emerging markets normally would be the gauge that we would look at, but the fact that it's flat is fine. It doesn't really, kind of tickle anything. Tech, meaning the QQQ and the sector XLK, are both leading the way this morning. And then we've got this consumer discretionary. Keep in mind the names that are in consumer discretionary, right? When you see it up, what names are in that thing making it go up? Now, I've made those charts so that when you're on Thinkorswim, you can go to the flex grid and you can have the setup so that each sector has the market weighed names from left to right, the greatest amount of weight, at least at the time that I built them. If they've changed since then, well, then they're not in the right order anymore. So you can go in and look at, say energy is up or tech. Tech is up. We just said that tech was up. So we come over and we look at XLK technology. Which companies are in this and which ones are causing that sector ETF to go up this morning? Apple's in it, Microsoft, Visa, Nvidia, right? Just kind of go down the list. Now, I've been using IGV for tech, mainly because of the kind of tech that's in it, right? So IGV has been a really nice bellwether. And look at the difference in here. It still has Microsoft in it, but Adobe, Salesforce, Microsoft, Oracle, Zoom, Activision, Inuit Software, and now ServiceNow. So it's just a different collection of software. A lot of box office talk over the weekend. So another reason to kind of take a look at Netflix, right? But here is communication services: Facebook, Google, Twitter, Activision, Disney, Netflix. Keep your eye on this one today. Yeah, definitely keep your eye on these today. If you're looking for these charts, I shared them in the Bullish Bears Discord, right? So when you're on the Bullish Bears Discord, come down to Traders Resource Zone, custom charts. Here are the sectors and their charts, right? And it tells you which ones. So you got, your risk on, risk off, midline, and then your other sectors, and then those grids, as I was sharing them, these, right? The big one here with the sector in it, and then the names that are in that sector. Those are all shared up here. You really only need that much of the link. You don't have to copy the whole thing. I mean, but it doesn't matter, right? Copy it, bring it into your Thinkorswim, and you will have that. Then just save it as whatever, so you know how to find it. All right, financials are slightly green, but not enough yet. We're going to need these financials if we're going to see anything really kick off today, right? Which means we're going to have to keep our eye on the dollar and the bonds too. For the weekly options list that you see here, if you haven't seen my streams before, the reason that I have 2 watch lists is because if you run a search for companies with weekly options, you get 600 names. Well, I can't have a watch list with 600 names on TrendSpider. So I had to break that watch list into 2, and that gave me 2 watch lists. But it's mainly just a watch list of companies that have weekly options. And I do that because a company has to earn the right to have weekly options, right? It's a sign of liquidity. Now, just because it has weeklies doesn't mean quote, it's liquid, but it is a sign of liquidity. If it hasn't even got enough liquidity to earn weekly options, then it's not liquid enough, right? When I'm trying to find something to trade and I ask the question, is this liquid enough? If it doesn't have earnings or weekly options, then it's not liquid enough. I'm done with it. I move on, right? A lot of really good names moving in the pre-market this morning that aren't necessarily sector weighted names. It's days like this where I say we're going to have to focus more on our own scans and watch lists and not lean on the sectors. Because look at those sectors, they're all less than 0.5%. We're not going to get our love out of that. When we're looking at the names of the weekly options list, try to not just focus on one individual name, but what that name represents. I see Tilray, for an example, is up near 1.3%. So, what does that give us? That maybe weed names are up. We would want to go look at the weed stocks. Nah, right? Kind of a mixed bag. Ha ha ha. Not too bad. A little bit. Couple of names in there maybe worth looking at. Check the airlines. Whoa. Yeah, airlines getting beat down. Chips. So chips are looking really good. It makes sense with the move in crypto because a lot of these names are holding either holding crypto or are a part of crypto mining. So it makes sense. But these are not up in an exaggerated way, right? Which is good because if we're looking for trade opportunities, I'd rather not try to trade something that's already made a 7% move this morning. AMD's got a really nice. We could be focusing on opportunities for an inside day breakout play here, right? We had these higher lows, higher lows, higher lows, and we're back up to the top of the range in AMD. So we got some good setups. TSM was looking pretty good. So chips, for me, it's going to be finance and energy. It has been for the last month, and I don't see any reason to stop in the current conditions. The EV market, legacy names, Tesla, Ford, uh, NIO, not looking too bad at all. May focus on FFIE for a failed bear pennant. That'd be a nice setup if we can get it. Plus, it's a really cheap market. Li Auto is another one on that list this morning. Now, keep in mind, there are some names that are really beat down and some that are flat. Rivian, GM, those are kind of more into the flat. And then LCID is down more than 1% this morning. 1%. Ride is down 1%. I keep talking about wanting to get into this thing, and then I keep not doing it because it just keeps falling and falling. So if we can get some red to green setups, something in GM or Ford, a couple of the EV markets maybe with NIO or Lee, the possibilities are endless. For consumer discretionary, Tesla, Ford, Target leading the way in that sector. It's what's giving it the boost. That's what I got for you guys. Be careful, be safe. I will see you at the Bullish Bears Large Caps room at 9:15 when I start streaming there. It is a 0 day today, so we do have that possibility as well. And I'll see you guys there.